Hi, this is Zach Meir from Zach's Traders Cafe with a look at some bulletin board hero stocks on Wednesday the 15th of June. Starting off with 88 Energy, and we've been waiting more than a couple of months now for resumption of the break higher that we saw in February. RSI needs to be back above the neutral 50 level, and ideally the shares back above the 50-day moving average of 2.11 pence, but just enough here on in terms of the technicals for aggressive traders to start nibbling away on the long side, given the way that we're turning back higher, well above the 200-day moving average of 1.3 pence. So at the moment, that's really the line in the sand as far as regarding the shares as being bullish or bearish, and we are still well above that figure, above the 50-day line, the target here up towards 5 pence plus, which is the top of this rising February trend channel. On to Avanti Communications, which bears have been eating into over the last few weeks. Looks like they might have eaten too much here as far as the rebound that we've seen so far. Obviously, we've had rebounds all the way down, especially in January to February. So this is nothing surprising, and we could obviously sell again after this. But at least while we're above the 10-day moving average at 61 pence, there's a chance of hitting that resistance line from January and the 50-day moving average at 85 pence, even if the shares fall away again after that. The real signal of bullishness would be a higher low above 50 pence, which obviously at the moment is still away from us in time, or at least for a few weeks, one would expect. On to Alexander Mining, stock which I was thinking of looking at this time yesterday, but wanted to give it a little bit more time. Probably that wasn't actually necessary, but decent close above the 20-day moving average at 0.14 pence, and also up above RSI 50 as well. It's leaving that at 58. A break above the 50-day moving average at 0.2 pence would be enough probably to start the process of a build to retest that April spike area at 0.4 and 0.5 pence over the next couple of months. Best stock of the moment, probably as far as both fundamentals and technicals are concerned, amongst the small caps, or one of the best at least, is Barclay. And here we've got this slow build above the 50-day moving average since March, and then along the 20-day moving average around 33 pence currently, and the floor of this rising trend channel from December. Looks as though above the 50-day average, 30.5 pence, we could head as high as 45 pence at the December resistance line projection. The good thing here is that we've had such a slow burn build up that one would trust the upside here to be delivered that much more faithfully over the next few weeks and maybe next couple of months, let's say. On to stock which has been featured in the Bulletin Board Heroes over the recent past, but obviously after the breakdown from February, not looking quite so good. Looks as though we've got at least an initial bounce here at the floor of this falling trend channel from the autumn of last year. 2.03 pence was the low in April, and we've bear trapped back above that, and while we're above the 2 pence level, looking for at least a retest of 2.5 pence to close that gap down from the end of last month. We've also got bullish divergence in the RSI window as well, with a much lower June support, not matched by a lower RSI price action, so that could be a positive as far as a momentum rebound is concerned. On to a stock which looks remarkably like Barclay Energia, and that's DP Poland. We've got that slow build here, in this case above the 50-day moving average over recent months, rising within a trend channel from as long ago as the end of October, and above the 50-day moving average of 27 pence, looking for at least 45 pence over the next couple of months. Unlikely, we hope, even to go back below the 30 pence level, which is the support of the last couple of sessions. Next stock is one which I haven't looked at that much before, but Hadid. Here we've got a falling wedge rebound, and just hitting that resistance line from December. End of day close or end of week close back above the 50-day moving average at 0.82 should be enough to give us a retest of the 1.2 pence post-February resistance for June and July. Finishing off with Northern Petroleum, which was worth a mention, just on the basis that we've gapped through the 200-day moving average at 3.24 pence, which looks like quite a solid technical signal there. We already turned around from that April bear trap down towards the 2 pence level and have an uptrend line in the RSI window. So essentially, while we're above, let's say, the gap floor around 3 pence, looking for as high as 5 pence to be hit over the next 4 to 6 weeks. That's it from me. More updates at the same time tomorrow.